With somewhat of a V-shaped recovery by the markets due to the recent stock market declines during this pandemic, opportunities are still available for undervalued stocks. Whether you are a value investor, growth investor, or dividend investor, all markets and stocks have been affected in one shape or form, even though the market has recovered to some degree. Using the principles of value investing as well as dollar cost averaging can be hugely advantageous during times like this. In this video, I'll discuss 3 different stocks that you can purchase in May 2020, which are still undervalued and present great opportunities for not only gaining profits, but collecting a handsome dividend along the way. Get ready, you are now entering the Academy. Without further ado, here are the 3 stocks that have been rocked by recent news and the market collapse in early 2020, and which still provide great opportunities for not only long-term gains, but significant dividend passive income along the way. For the first stock, we have TD Bank, ticker symbol TD. Toronto Dominion Bank is a Canadian financial firm with a sizable presence in the United States. The current share price has stabilized in the $40 range, off from its recent highs of $55. The current yield is an attractive 5.6%, and the dividend has been increased or maintained for more than 20 consecutive years, including through the 2009 financial crisis, a feat that most US banks couldn't duplicate. TD Bank is a truly regional, diversified bank where half of its revenue comes from its operations in Canada and the other half from the United States. Canada's banking market is highly regulated, giving the largest players, including TD Bank, financial protection. There's also a more significant stringent focus on safety, leading to a conservative financial profile for the bank. The other half of the business, meanwhile, is where it is focusing on for growth. That includes one of its US counterpart branches, which is one of the largest US banks and encompasses about 1/3 of its earnings, as well as wholesale banking and brokerage services. And not only is there room for growth in these services, but since TD Bank branches are mostly concentrated on the East Coast of the United States, there's also room for expansion throughout the rest of the United States. There's no question that a recession would hurt TD, as it will most banks. However, this conservative industry player has a unique mix of business services that should help it survive the next downturn like it did the last. Meanwhile, investors can collect a generous dividend while waiting for the company to get back to growth when the economy eventually picks up again. The second stock is Nucor, ticker symbol NUE. Nucor Corporation's share price has been hovering in the $40 range and has recovered somewhat, but is still far off from its early year highs of $58, and it is currently paying a 4% dividend yield. Nucor operates in a highly cyclical industry that tends to do poorly during recessions, as the customers it serves, like construction, automakers, and manufacturers, are less demanding on purchasing steel during these times. However, the company has increased its dividend for nearly 50 years. It has significantly navigated through tough economic times before, and it's highly likely to do so again. Nucor's conservative approach is a core feature of its business. Its modest use of leverage, with financial debt to equity sitting at 0.25 times at the end of 2019, is a big part of this. Then there's the fact that Nucor operates electric arc mini mills, which are highly flexible and can be run profitably at lower volumes than older technology blast furnaces that underpin some of the competitors' businesses. All in all, Nucor tends to have relatively strong margins in good times and bad. Moreover, it has a long history of using its financial strength to invest for the future during downturns. Although it has pulled back some on its current spending plans, it is still putting money to work so it can come out on the other side of this downturn a stronger company. That may require taking on a little extra leverage, but its balance sheet has plenty of room for that. If you're looking for a reliable dividend payer and an industry leader, Nucor looked fairly attractive at these current prices. The final stock is Chevron, ticker symbol CVX. Don't give up on oil yet. Oil prices are extremely low levels, and the pain isn't likely to let up for a while, given that there's a supply glut sitting in storage tanks around the world. That's the bad news, and it's already leading to bankruptcies throughout the energy sector and oil wells being shut down. However, those are exactly the things that will help to alleviate the supply-demand imbalance in this historically cyclical commodity industry. One of the largest integrated energy companies in the world, Chevron offers investors a 5.7% yield backed by over 3 decades of annual dividend increases. That's an important record because it shows that Chevron knows how to muddle through the bad times like today so it can benefit when oil markets are more stable. One key is the company's rock-solid balance sheet. Ending 2009 with financial debt to equity at around 0.12 times, it has plenty of leeway to use debt to fund its capital plans and keep paying a dividend. And heading into this economic recession, Chevron had already started pulling back on the spending front to save cash. Oil prices are the biggest determinant of the company's top and bottom lines, so there's no way around that. But Chevron has the financial strength to handle material headwinds in an industry that still has an important role to play in supplying the world's long-term energy needs. And that makes it worth a closer look, especially for the high-paying dividends. By employing simple strategies learned in this channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk dividend income flow that will appreciate over time and continue to pay income continuously. Through careful planning and diligent investment of capital, as well as reinvestment of dividends, one can create a dividend income stream that can provide substantial income, eventually covering everyday expenditures and beyond. This video provided 3 stocks that are greatly underappreciated as of May 2020 and can be added to any savvy investor's portfolio, providing not only capital gains opportunities, but also substantial dividend income along the way. If you'd like to pick up some of these stocks now, make sure to use the Webull stock trading app. This provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a dividend income portfolio using the methods mentioned previously. And if you register now and make your first deposit, you'll receive 2 free stocks that can be worth up to $1,400. So make sure you take advantage of this offer now. Be sure to check out the links in the description to get started on creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.